Investing and trading are completely different things, and today we're going to discuss these differences and how to know which one to use. Hello everybody, my name is David Scheuer with StockerFinance.com, and let's just get right into it. First off, kind of a weird presentation, might seem a little unprofessional, I know, but Microsoft Paint and stuff, I feel like this is the best way just to visualize it and just to show you guys kind of an explanation of what investing is, what trading is, and then at the end we're going to come together and bring it to a close with when should you use either one, how you should use it, etc. So let's just get right into it. First off, we're going to talk about trading here. Trading is simply buying low, selling high. Simple as that. Now, there is shorting and other things like that, but we're not going to talk about that today. We're just talking about the basics of each one and kind of comparing the two and when you should use them. So, the problem with buying and selling here, when you're especially in day trading more specifically, is that every time you buy or sell, and we're going to talk about more of a, trading through a third party broker here, not necessarily trading through something else more professional, but just a third party broker here, there's always going to be fees. And these fees can range from, $5 to $10. Some there are free. I know Robinhood doesn't have any fees. However, they have a very long wait period or unsettled funds period, I believe. We'll have to look more into that. Correct me if I'm wrong. Anyways, so these fees, as you can tell by all the orange dots here, which represent the fees, all these fees happen when you buy and sell the stock, which is a big problem for day traders especially, because these are a lot of fees. If you make, 10 trades a day, and each trade costs $10, each buy and each sell costs $10, you could be spending a few $100 a day just on fees for day traders, and that's insane. And plus, if you lose money, if you have to cut your losses on one of them, those losses are even bigger because of the fees. And a lot of people overlook this factor of trading because they realize, oh, I didn't lose that much, only lost 1%. Wait a minute, the fees are also added on and now it's 2% or whatever. Who knows, it could be more, it could be less. But a lot of times when you do make a gain, the fees become irrelevant because they just kind of go away into the gain, but they do also take away from your gain. And so that is one thing that you should definitely take into consideration when picking a broker. And I'll do another video on picking a broker and which one is best for you later on in another video. But anyways, let's get into the next part here. So, as I said earlier, unsettled funds. What are unsettled funds? Unsettled funds are basically what happens after you sell your shares. So when you sell your shares, they become unsettled because it takes a while for them to settle and turn into cash again that you can then invest or trade. Now, you actually can trade or buy with these unsettled funds, but if you buy a share and then people have I know brokers have their different consequences, different rules, but at least the one that I use, what happens when you sell with unsettled funds still, you can buy it, nothing happens. But if you sell then, and before the 3 to 5 business days are up, and that's normally how long it takes. If you sell then, what happens is basically there's going to be a big penalty, and this penalty can range from either being, you have to call on the phone now, you can no longer use an online service, you have to call straight to directly the broker, sometimes it's whatever, it could be, it's really annoying, something you can be completely banned from trading through that platform for like a certain amount of time, they could put you on hold, whatever. It's really just a disappointment. You don't want to get into that. So anyways, let's go into the next thing here. So with unsettled funds, another problem here is that you could be trading for the first hour of the day very rapidly. This happens with a lot of day traders. It's a big problem. They trade very rapidly right at the beginning of the day because that's how these gurus all say you should do. Oh, trade the first hour or two of the day. That's where all the money is. That's not true. Power hour, if anyone knows what that is later in the day. That's when a lot of big spikes happen, a lot of big jumps happen. It's kind of a myth. No one really knows why. It's called power hour. Just kind of after lunch, when all the people come back from lunch and start trading again in the market. But anyways, so they all trade these beginning hours here, and if you do that, what happens is, hey, you're out of trading cash. All your funds you've already sold. You have all these unsettled funds. You can't trade for the rest of the day, for the rest of the week. Who knows how long, and sometimes it's a really big disappointment because you just missed a giant spike. Now, obviously, this also can't be a problem because you never know when there's going to be a giant spike. No one ever knows when something's going to happen unless they're really intelligent, but you never truly know. You can get really good at guessing, and you can get really close to being 100% sure, but there's always that chance that something could go wrong or something else could happen, even if you're almost 100% sure. So anyways, that's something to keep in the back of your head here. Let's get into the next part. All right, everyone. Now let's talk about investing. So as you can tell in the top left, it says 1 year instead of 1 day. This is because investing is a much longer action. It's not just buy low and sell high and within a minute. It's buy low, sell high within a year, within a few months. It's generally a longer term thing. Now, in between this long term investing and this short term day trading is something called swing trading. And we'll talk about more later. And there's also other forms of trading. There's a bunch of different types, but we'll talk about that in another video. Anyways, let's keep going here. So there are two fees, buying and selling usually. Sometimes, depends what you're investing in, there can be no fees. It can be a percentage fee. There's tons of different types of fees, even with day trading. However, day trading is more commonly used with a third-party broker. So that's why it's normally a buy and sell fee. The fees are pretty irrelevant here because normally the dividends will make up this fee, and it really doesn't make that much of a difference in the long run, unless it is a percentage fee or whatever. But anyways, let's get back on track here. So the good thing about 1 year is that you can get a much larger gain. An example is Amazon, Google, Tesla, all these big companies that have grown massively, but it's taken a long time. It's taken 10 years, 5 years for them to get these 1,000% gains or hundreds of percent gains. They're just massive that you don't really see anywhere else. You can get these gains with day trading. You'll see this 100% spike or stories of people who got 1,000% in a day or whatever. But most of the time, those people lose their money right afterwards because they try to do it again and they lose everything, or they just got lucky, or it's just a pump and dump scam. So, yeah, I wouldn't believe those. This is much safer as well. If you're investing in, a large company that you have faith in, it's going to grow, and you really love the company, that is how you should invest, not just by the numbers and not just by trying to buy the lows and sell the highs by chance like day trading is. Now, I'm not going to, hate on day traders or anything. It's not my specialty. There's people who know a lot more about it than I do. So you can talk to them about it. But if you have any questions about any of this, leave it in the comments below. I'll love to answer. All right, so now that you know what investing is, and now that you know what trading is, let's go ahead and talk about when you should use the two. So first off, a lot of people say this, and I sometimes say this myself, you should trade the spikes and, invest the long way up. Well, sadly, complete BS. You don't want to listen to anyone who says this, because you never know when one of those spikes is going to be a long way up, and you never know when one of those long ways up, according to people or whoever, is going to just crash right back down and just be another little spike in the stock price. And you just don't know this. You don't know when a company is being really volatile or if it's actually taking off in the long run. What you do know is who the CEO is, who the people are. You know their numbers. If you trust the company, then hey, you should invest. You should stay in it long. It's a really good product or whatever it is, and that's when you should invest, because you know that you believe in this company and you know it's going to do good. That's when you should invest. Now, when you trade, if you just want to have fun, if you just want to trade these little, these low price stocks, and you're interested in betting, go ahead, do that. It's a terrible idea, but go for it. Now, I'm not hating on trading here. I'm just saying that day trading is a lot more risky, and there are people who are quite good at it, but you have to be very wary of when to sell, because if there's a spike, you don't know if that spike's going to bottom out and then keep going up, or if it's just going to plummet down because the company got sued or something. So if you're trading, make sure to, and this is with investing too, make sure to cut your losses, have a stop loss set or something like that to kind of save you there. So anyways, let's talk about when you should be, now that we kind of got this idea out of the way and X'd it out, let's talk about what I think in terms of when you should invest and when you should trade. So personally, I think if you have $10,000 in your account, you should trade, or $10,000 or less in your account, you should trade. $10,000 or more in your account, you should be investing. This is because if you have $10,000 or less in your account, hopefully it's not your life savings. It's not that big of a deal if you lose some, and it's not going to be, ruin your life if you lose all of it. Now, if it is going to ruin your life if you lose all of it, you shouldn't be trading it at all. You should be saving it up in your bank account until you have enough to where you can live if something goes wrong, all right? Now, another thing here is why I say $10,000 or more should be investing is because, again, if you have $10,000 or more, that's a lot of money. And if you were to lose all of that, that could hit you pretty hard. Now, obviously, if you're really rich and you're just messing around, whatever. This applies to different people. But personally, I say $10,000 or less, you should trade, have fun, learn the game. Generally, people who have less than $10,000 are kind of new, and they want to just kind of learn how to do it, what's going on. So that's why I say you should trade. That's a great way to learn. Now, investing, if you have $10,000 or more, it's safer than trading. It's not as risky, you can invest a lot into one company or a few big companies, and if you really believe in them, you can invest a lot of money in them, and hopefully, in 10 years it's gone up, a few 100% or more, and you've made a really nice profit off that when you sell. And so that is one thing to keep in mind. All right, so now let's go ahead and break it down what we learned today. So first off, we've got long-term investing and active trading. And if you have an account, let's say you have an account with like $10,000 or $100,000 or something like that, all right? And you want to do all of them. You want to invest, you want to trade actively, you want to, invest in an index or mutual fund. Well, here's the breakdown of what I think you should do. I say 25% long-term investing, 25% trading, 50% index or mutual fund. A lot of people are like, what? I thought investing and trading was the big thing. Index, what even is an index? What the heck? Who even knows what that is? Well, let me tell you, slow down there, buddy, all right? It's pretty important, it's pretty awesome, and a lot of you will love it, and a lot of you will probably think it's boring, but it's worth your time to listen here. So anyways, let's keep breaking it down here. So long-term investing, medium risk, there's some fees involved. Active trading, very high risk. If you're trading penny stocks especially, good luck, buddy. It's tough down there. You can get good at it, but it is a tough, rough life down there in the penny stock world, especially with all the scams right now. Very high fees as well because of how active you're trading in the day trading world. You could be getting, as I said earlier, a lot of fees daily. An index and mutual fund, very low risk, almost no fees. For example, Vanguard, I think it's like a 0.01% fee or 0.001% fee. Literally almost nothing. So index and mutual fund, as you can tell here by this giant purple circle, is the safest route. And this is because of compound interest and the low fees, as I said. Compound interest is basically, compounding on your investment. And this happens in investing as well. It can happen at least, as your account gets bigger, and then if you get 50% when you get $1,000, you get $500. You now are at $1,500, right? Well, now if you get another 50% return, that $1,500 is going to give you even bigger return because of this interest, because you're compounding on top of it. And so index and mutual funds basically do this. Especially these funds, basically, if you leave them in each year, they keep building up, and hopefully it picks up speed. After the first few years, if you keep putting money into it, they're going to keep compounding, keep going, keep growing, and they're just going to take off and get really big, especially if you keep it in when you're really young. And this is why I encourage people who are, 16 years old even, to invest and put their savings in a mutual fund, obviously, or an index fund or whatever. I think Vanguard is a great option for a lot of people. Anyways, this video has gone on for a while. I hope you guys enjoyed. If you learned anything, leave a comment below, leave a like, whatever. You know the drill. People say it all the time. Anyways, guys, if you have any questions, leave them in the comments below. Hit that subscribe button. Lots of new videos coming this week and forever, hopefully. Anyways, I will see you guys in the next video. Peace out.